Welcome back, everybody, to Markonomics 101 presents Hoot Loot, the place to be informed, be amused, but never be misled, sometimes even to go insane. And that's why I am in this rubber room right here, because I have finally gone insane. Today's show is called, Charting Insanity. Are we finally at the precipice? I don't know how much weirder this market can get. We've been talking about all the scams that have existed, but I mean, this thing just is, the dots just don't connect. We're going to try to make some sense out of it. The charts are saying different things, and we're going to go through that in just a minute when we come back. If you would please like and subscribe down here, and don't forget we have coming up. It's going to be within the very shortly the promotion with Bill Murphy's La Metropole Cafe, free year subscription to that great newsletter that he has, okay? So we'll see you in just a second with the charts. Well, welcome back. We're talking about charting insanity, and speaking of insanity, here's probably one of the biggest insane things I've ever seen. That's good old Bitcoin there. It's starting to, as you notice, it's starting to come down to that 30,000 level where I think it's going to break. And I think this thing is probably, I'm going to guess that the cryptocurrency craze is, is kind of coming to an end here, because I just don't know what the hell they're going to do for us other than, get us into trouble. They're mostly surrounded by crime and trouble and things like that. And they're not really an investment. It's a medium of speculation. Nobody uses it as a currency or to buy or sell anything except, laundering money, things like that. So, this is another little chapter of this nutty period here. Here's another one, Tesla and my good old buddy Elon Musk. These two, Bitcoin and Tesla, I've called the canaries in the coal mine. I didn't last Wednesday because the market actually looked like it was pretty strong. Now it started to turn again, and it looks like it's finally starting to turn for the last time. We'll see. I'm not going to promise Velcro or anything like that, or I'll eat crow or anything like that. But there's some really major, significant turns in the market that in the last couple of days that really made a difference. Tesla has broken below its bear flag, and so the next stop for it is about 550. If it goes below that, it's going to go a lot lower. You saw last week that we put all of Tesla's inside sellers on a list, and I mean, they're just dozens and dozens of executives leaving this company and selling their stock. So they got to know something that we don't know, because we don't know anything about it. Oops, we went a little too far there. The Dow Jones Industrials have just barely broken above a bull flag. But they've turned down. They had a really nasty day on Friday, so we're gonna check this out. We may have just seen the top. I'm not going to say that I'm going to ring the bell and all that kind of stuff, but we may have just seen the top right now. A lot of things have turned, and they're telling us different things than we thought before, and we're going to go through that. NASDAQ 100 also did make a new high, made me eat crow, Velcro, not even good with whipped cream on it, let me tell you. And, it's turned down a little bit too, but what we're going to see is some of the stocks that looked like they were bursting out last time might just not be doing that after all. So that was something we want to show you here. The S&P 500, also had a pretty sharp down day. This one is the strongest of them, but what's interesting is there are more new lows than new highs in the S&P 500. Believe it or not, that with it at its all-time highs just below them, still more stocks are making new lows and new highs. That's not a good sign. That means internally you have new leadership on the downside that's going to start pulling you down, even though the market indexes are making new highs. So that's coming up. This is the small cap index, and here's another one that will show you that too. It's now not only broken, it's broken significantly below its trend line. So this one right here, small caps start losing strength like this in that fashion. That means liquidity's drying up, and the market really does look right now pretty bad. I mean, this is right now it's going to have to turn pretty damn fast just to not look bad, because it does. The transportation average still in what probably is a bull flag, but it's coming down here, and we're starting to see a number of transportation companies not doing nearly as well, and they're very indicative of how the economy is doing. We are getting major cross currents there, and that's the insanity here. Everything's insane. Everything's bottlenecked. Everything's nutty. So The US dollar, here's another one that's nutty for you. How do you print so many US dollars and get them to go up? I have no idea how this is happening here, but if it breaks where I put key resistance here, it's actually in a new bull trend. Who would have thunk it? No one. And this is one of the reasons the market's so confusing, is because everyone thought the dollar would go down, including me. That's why it doesn't go down. It's, when you're with the crowd, you're with the majority, chances are you're wrong. And this one, it was so hard to think of the dollar as having any scenario that makes it go up. But here's the scenario. Too many people already were short on it. So crude oil is making new highs, not as quickly though, and it's starting to break down. We're going to see that in a minute. Unleaded gasoline also curling over a little bit, not going up as much. I mean, energy's still doing pretty well. Natural gas going up here. So the energy component of prices is still doing pretty well. Now, the producer price index came out last week and had a 1% month-over-month increase. That's 12% a year. So there's some major inflation here, but we have some interesting things to show you. The agriculture fund also bounced up a little bit. That's still doing pretty well. Food prices are still a little bit of pressure. Sugar came up, and also, sugar's bounced off its support. That one's everywhere. Livestock still in short supply. A lot of meat products are, not only because they're not eco-friendly right now, they're sort of out. People don't want to eat living animals anymore. So, this is the demand just isn't there right now for it. Base metals still looking pretty good there. There's a shortage of them too, and they're now starting to just retrench a little bit, but they're still doing pretty well. Here's a couple of them though that don't look so good. Freeport Copper is probably the largest copper producer, and it looks like it's breaking down. And look at how much it's gone up, and it's breaking down. So I would say right now, this one looks like maybe there's going to be a little reversal here, and that's important because we're going to show you in a second some other factors that show the economy maybe just went up real fast, coming down real fast. Here's another place where we have shortages of steel and iron. This used to be a steel and iron country. Remember, like Bethlehem and U.S. Steel and all that? There's like very little here now, but here's one, Cleveland Cliffs Iron. And this one is broken down now too. So this one was looking real strong. This one is now broken down. We got to now pay attention. Here's another one, Alcoa, a big aluminum producer. It looks like it's possibly heading down too. So again, there are some signs that things are slowing down real fast. Palladium is another one. I mean, palladium has made what looks like a head and shoulders here, and it bounced off of support, but it came down awfully fast, last couple days, like as if the economy, just the demand side of it, just evaporated, and that's very strange. Gold again had a really not good reaction to things that the Fed has said. I mean, Jay Powell and the Fed have come out and said, we're going to do whatever it takes until we see a great recovery in the economy. Well, you're not going to see a great recovery in the economy by throwing dollars around. Wealth is not created through paper. Okay, you give people more paper, they're no more wealthier than they were before you gave them the paper. Now, if they can make more products, then they're wealthier. Like the way that the agriculture, farm machinery took people off the farm and made them, more productive. Fewer people required to grow all our food. That's where you become wealthy as a society, not giving out paper. So I don't understand what why there's so much argument about it. It does nothing. It's just a false profit, and it's just nothing. So gold did not have a good day, and even more importantly, silver also kind of got whacked a little bit, and the miners for gold and silver also don't look very good. I don't know why. I can't explain this. They have the greatest fundamentals I've ever seen. These should be going up. I should be giving you buy recommendations on them. I can't find anything that looks good, and I can't give you a good explanation other than the fact that the markets are not as free as we'd like them to be. This one's hard to explain. Okay, so 3-month Treasury bills are now trading above the Fed funds target range. They ended the week at about 40 basis points. They traded at 50 during the week. The Fed is going to have to raise rates whether they like it or not, and that's what this is showing. The 5-year yields are now coming down, and that's surprising. I thought maybe we'd see 5 years come up a little bit as we saw the short term. Apparently not. If you look at the 10-year, that looks terrible now. You look at the 30-year, looks even worse. How is it that you could have a 1.9, 2% yielding 30-year Treasury bond in this country with inflation at 11%? How is that? I certainly don't know anybody buying 2% bonds. Oh, yes, that's right. The government is buying them. That's the only way you can get bonds so low. Nobody in their right mind is going to lose 9% a year going into a trade, but the U.S. government for your for your benefit. Thank you very much. Bitcoin Cash. This is I'm going to say right now, I think the cryptos are pretty much on their way out, and Bitcoin's kind of been sort of discovered as being what it is. Bitcoin Cash is nothing. Ethereum maybe will be something. I don't know. They do have a management. I don't know about the value, but even so, it's crossed 2,000. It's likely to come down in price simply because of the chart. Litecoin too. That's almost all the way back to where it was a couple of years ago. I think there are 10,000 cryptos. There's no need for them. They don't do anything except people trade them back and forth, and that's about it. So some of these are just have to go out of business here, or whatever it is they do. I don't even know if they have a business. It doesn't seem like it. Ripple is a token. This one's another one that'll go to some number. There'll be lots of tokens for sending money out. This is not going to be a very profitable business. Not when there's 10,000 crypto companies out there that we know of. Now, this is interesting. Apple broke out last week of what we thought. This is why we thought that the market might head higher. Is because of Apple. Apple's so big. Well, it bounced right off of the top of the bear flag that we had before. So Apple looks like it may be heading down. And, we're going to see. That's going to be a very interesting situation, because now this data point has changed from a plus to a minus, and that's an important data point. So let's keep going here. Same as Amazon. Amazon broke out of the 35.50 range where its top was and broke back down. So this is another one that was positive for like a day and a half and came back down, and all of a sudden it's a neutral. So all of a sudden the market doesn't look like it looked the other day. Facebook, again, this one is coming down, and you got to know something. Mark Zuckerberg, we showed you last week, is selling 77,000 shares like every other day or every third day. That's $26 million worth of stock. He is by far the biggest seller. He is a huge seller of this stock. And why? I mean, if he, why would the guy that founded the company all of a sudden be a massive seller? Gee, maybe he thinks the prospects aren't as good as they used to be. I don't know. But all I have to say is, what's that, Mark? What's that? Get that QR code going. Microsoft, this one is got to be about as high as it can go. I mean, look at it, it's straight up. It's still a plus. It's still broken up, but at some point here, it's got to just be exhausted. Nvidia, that one, look at that one. It just spurted up like crazy, and all of a sudden broke down. Semiconductor, this is now the new poster child, but it's broken down. And when stuff like this happens, you see that final exhaustion move, and it finally just has no more gas left. That's probably what's going on with Microsoft. And now we're going to start to see companies, I think, that have no gas left because they've just given it the last shot they can, and now everything all of a sudden starts coming down, together. So the bank index, another one that has, looks like a rounded top to me. It's the yield curve we've mentioned. The steeper it is, the greater the spread between 30-year bonds and short-term bonds. That's a steep yield curve. That's good for banks. It's flattening. That's not good for banks. And they've also gone up quite a bit. So a lot of them look like that. We're going to show you that real quick here. These are also broker dealers. These have done really well with some of the deals that have come out, I should say. But, it's possible that the market's out of money and out of liquidity right now. And, they're, these things have like doubled in the last 6 months. You just can't have that kind of movement all the time look like it's normal. This is not normal. This is insane. Indexes do not double in a year like the Wilshire 5000. It's gone from 22 trillion to 44 trillion dollars in a year. That doesn't happen, especially during a pandemic when everybody has the flu and can't work. So it's pretty insane. American Express, there's another one insane. Everybody wants to buy something. Everybody's got an American Express card. Keeps going up like crazy. Bank of America though, rounded top. This one looks like it's not. This one looks like it could break down. Similarly, Citigroup, it had gone up for a little while. Looks like it could break down. So most of the banks look like this, rounded top, about to break down. That's not good. Tech breaking down, banks breaking down together. All of a sudden, you have the market breaking down, and it's not really a good thing to have interest rates go down like this. It starts telling me that there's no demand at all, and that's really not a good sign. I mean, that's you can't give money away at 1.3% for a 10-year. You're talking about bad stuff, because that is like give money away, especially with this kind of inflation. The airline index, here we go again. There was some pent-up demand for people to fly, and all of a sudden this is broken down. And we have American Airlines. There's one example of it breaking down right there. Alaska, which is a damn very good run airline, it's breaking down too. And we're seeing that now. FedEx, was starting to move up. It had looked really good. It moves all the goods around, and so it's very important. It's a very good indicator of what the economy's like. And FedEx all of a sudden now has stopped moving up, and it's one of the only games in town. I mean, you have that and one other something. Costco, I don't understand this one. You have Costco like screaming to the moon here all of a sudden, and I don't quite know what. But all of a sudden, you have some of these retailers look like we have a great economy, and here's one of them right here. You have that, and then you have ones like Target, another one looks like a great economy, and everything is cooking on all four cylinders. And then you go to other stuff like Walgreens is breaking down. Maybe you're not going to get your third jab after all. All I know is they're talking about it right now. Boosters, 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 and more and more and more and more and more until we basically are hooked on these things. But Walgreens is broken down, and it was one of the chosen ones. Uber, I put this in just as something that we haven't looked at in a while. This is ride sharing. They all look like this too. They're also in rounded tops. So a lot of things are now all of a sudden looking really bad in the marketplace. And finally, there's UPS. It's still heading around its tops. It's indicative of the economy, just like FedEx's, but it's not really going up. It looks like, I don't know, it's sort of teetering on the going down part. The economy is insane. Everything is insane. Charting is insane. What do we have? Do we have a depression, an inflationary depression coming up, an inflationary, hyperinflationary stagflation? I don't know. The charts are telling us much incredibly different things, but we're gonna stay on top of it. Right now, I'd stay away from it because it's telling you too many things that are too different. There will be opportunities. They're just not here right now. So if you would like and subscribe right down here, I would appreciate it. And we're gonna see you next Wednesday.